Hi, this is Andrea, managing partner and co-founder of P101, one of the largest venture capital player Southern Europe, managing 6 funds currently, and we started back in 2013 and deployed more than 250 millions over time. If I have to summarize what did happen over these past 10 years, is that first we got attention from local institutional investors, and they provided funding and money to fuel those companies that were to be supported by a growing number of investors and operational players. And these brought also the attention not just of investors, but also from corporate. So the two main drivers that I should point out over these past 10 years is that now, in currently, we're at a point where the market knows that venture capital exists, entrepreneurs know that venture capital is a potential source of funding, and large corporate knows that they can go through a venture capital portfolio and see if they can find opportunities for innovate their current businesses. And as well, private equity, because of the venue where we are today, even private equity started paying attention that already did globally, but in Italy they started seeing what venture capital players were invested in, and so representing a further opportunity for divest. I think that venture capital is not so geographically characterized, because what we do invest in is 10, 15 years threshold in terms of time horizon. So probably what we look from Italy is with a different approach, but is what everybody else, everywhere else in the world is looking at. So basically, AI is the buzzword. And obviously, we are looking to AI as any other venture capital is doing around the globe. What we do have to adapt is the size of the opportunities, the angle, the places where those opportunities come from, which obviously, if you are in Silicon Valley, is different than if you are in Milano. But I think that if I have to summarize in some single specific thing, trying to simplify what we have to change as a strategy every day, is probably healthcare is the very big things, because healthcare is so huge. Everybody thinks to the very basic research aspect of healthcare, but more and more consumers are looking to their own self-knowledge of what they have to care of. And this is a huge opportunity at any level, not just, let's say, at a research point of view, but also as a technological point of view and anything related. That's probably one of the things connected to the previous question that is making this geographical area a big opportunity, because we are plenty of talents. We have this narrative commonly saying, we have so many young talents going away from their hometown, and we did experience that, but now there's an opportunity that can be offered, and so we have this abundance of people, of skilled people, of heritage that is bringing at the table not just new skills, but also cultural heritage that is helping these skills to be deployed. We have funding, and so I think that where we can help is connecting this raw material with investment opportunities. Again, I think it's a matter of narrative. Now, what does it mean, growth stage? Because I've seen so many companies funded with crazy amount of money, and where the growth stage was going from 10 millions to 20. I think that we have to review a little bit what we do expect when we talk about growth stage. Growth stage is when you are going from a small and medium-sized business, even if very innovative, to something that is going to be the basis for a large corporate. So that's, to me, the growth definition. And many times we've been seeing things that were not really in that phase, and were just more, God, we had a couple of millions more in revenue. That's not growth. But going back to the original question, I think that obviously funding at that stage is crucial, but also again the culture of from the entrepreneur point of view, but also from the investor point of view of understanding what does it mean going from 10 to 100 and to 100 from 1 billion, because it's not anymore a matter of what you're doing, what is your underlying business, is how do you manage a large scale, complicated daily business where you have to hire from the single person to tens of people at a time. And so you are not anymore involved in the technology that you were aiming to, but you're involved in many more traditional aspects that you have to know on top of what you already know in terms of technology. So it's that point of attention, I think, is what makes the difference. Yeah, definitely. When you start as a GP with a one fund, day one you have a fund, few investors, and zero companies. It's pretty easy from any point of view. When you are at this stage where we are, we have 6 funds, 20 people, 100 of investors, Bank of Italy, and many regulated aspects of our own business. So, first of all, whatever is the underlying asset class, in our case, venture capital, you need to scale these operations. And so you need obviously to use technology. Second, obviously we are a tech investor, would be weird that we wouldn't invest in our own technology. And the result that we can stay today, even if it's obviously is a process, is not just a goal, is that we did see the capacity of managing a number of investment opportunities, a number of investors, a number of funds in a smooth way and in a more and more complex environment that the regulation is creating. So technology is a must too. And I think we can experience very good result. And I think this will be the trend, not just for a tech investor as we are, but also for other private and not just private asset class managers as well.